$24,000 exactly is what it's going to cost you if you want to buy a Bitcoin. And yesterday we touched this 200-week moving average, which, as I said to you guys, was the big support, the big opponent that Bitcoin has to face, because it's been under this for 35 weeks. It's been under the 200-week moving average for 35 weeks. And yesterday we tested it for the first time. I didn't expect Bitcoin to go right through it on the first time, but I do expect it to go right through it, maybe even sometime over this weekend. So that's what we're going to talk about today. It's Friday. We're having a big banter here. I've got some great guests for you. We're going to talk about whether this pump is a bull trap or whether we're in the beginning of a bull market. We're going to talk about altcoins. We're going to talk about inflation and whether inflation's coming back. We're going to talk about Kwon and the SEC, and then we're going to talk about the SEC and the way that they're regulating. So it's going to be a big fun show. Let's do this, guys.
Get the fuck out of bed, bitch. Go. Get up, and then they got go. Time to wake up, bitch. Get up. Get up. Get up.
Wakey, rise and shine. I do see in the comments that people are saying, drop this intro, get a new intro, please. Just do another poll. And if the poll says get a new intro, we've got a new intro ready to rock and roll. Okay. The new intro would look something like this. It would look not exactly this, but it's something.
Pump. Always, guys, respect the pump. I respect the pump in all assets. Why? Because it's kind of like karma. You know, the power of the pump.
Tell us which intro you guys want, whether you want to get the fuck out of bed, bitch, go, whether you want to respect the pump. Anyway, if you do respect the pump, let us know that you're here and in class and present. So when I call your name, just say present. 𝗕𝗬𝗕𝗏𝗍, if you're here, present. Sunrise, I know you're here. I'm not even going to ask. Paul Rush, I know you're here. You are here. Gabby the DJ, if you're here, say present. Daniel, if you're here, say present. Aaron, if you're here, say present. JJ, if you're here, say present. Joao, if you're here, say present. I want to know if you're here. I want to know if you're here. And I want to know if you respect the pump. That's what I want to know. Alrighty. Welcome back, guys. And for those of you who are new to our channel, subscribe to our channel. We're growing. What is the number? 694,000. What? 500? How many subscribers do we have? 604,000. So join 604,000 people. We are one of the fastest growing channels. Actually, some of our guests are from another very fast growing channel, which is why we brought them here today, because we just think that they are fantastic. It's going to be a big show. It's a Friday Banter today. And you know how much I love Friday Banters, because they're just full of alpha, and we've got a lot of things to talk about. We're going to talk about Bitcoin and whether this pump is real. We're going to talk about Kwon and whether our perception of Kwon has changed now that the SEC is coming after him. And there were some big allegations in the docket. I want to talk about NFTs on Bitcoin, because someone bought an NFT of a wet fart for $280,000 today. No jokes. There was a Bitcoin NFT which was bought for $280,000 today. It was an NFT of a wet fart. So I think we need to talk about NFTs on Bitcoin. I want to talk about ETH and the Shanghai upgrade. I want to talk about Solana. I want to talk about Gains Network, which was listed on Binance today. I want to talk about the week that we've had on altcoins. I mean, this is the week. We've had render up 41%. It is at 197, so just under $2. We've had a pump. It's the Asian pump. Remember I told you about the Chinese pump? We've had a pump because Filecoin had a pump. And so now the Asians have brought in this whole narrative of these file storage coins, which we kind of said was going to happen. You got Lido up 23.1% this week. You got Rocket Pool in the same narrative up. So we're going to talk about the liquid staking protocols. There's a lot to talk about. But before we do, let's just thank our sponsors. So you know that the Friday Banters are brought to you by none other than the best VPN in the world. That's NordVPN. They are the crypto VPN. And listen, as I said to you guys before, if after all you've heard about Gary Gensler and staking, and how he's keeping the US out of staking, and how he's targeting the centralized stakers, but also the decentralized stakers. If you're still operating in crypto without a VPN, if you're not masking your IP address, if you're not using a VPN today, you shouldn't be here. You shouldn't be watching this, because you're going to lose all your money anyway. So what you need to do is sign up for NordVPN, protect your IP address, surf completely anonymously. And if you sign up today, you get a gift, but you also protect your crypto for $3.35 a month. Okay. It's like, you got to do it if you're in crypto. So, and they also bring you these Friday Banter. So support NordVPN, and let them protect you and let them support us as a channel. All right. So we got a Friday Banter today. I've got 3 big guests. First of all, we've got Joey, who's a regular on our shows. Joey, welcome back, my friend. How are you?
Good. Thanks for having me.
Good to see you. And then we've got 2 new guests who are now part of the Banter fam. This is their official welcome to the Banter fam. They do run the Bankless podcast and the Bankless shows. And for those of you who don't know what Bankless is, it is a channel which has amazing content. I really go to them for real deep dive content. No hype, no fuss, no nothing. Just the facts, and they really dive deep into the facts. So we've got Ryan and David from Bankless joining us for the first time. Guys, welcome.
Hey, what's up, guys?
What's up? How's it going?
So I don't know if I did the best job pushing Bankless. So there is a link to Bankless below, but maybe you guys should just give us a little bit of background as to who Bankless is. As I said, I love the content. Like, especially the last couple of weeks, I've been addicted to your content. I listened to a podcast that you guys did with 𝗟𝗍𝗍𝗍𝗍, which I think was an unbelievable interview. I did listen to an interview with 𝗕𝗬𝗕𝗏𝗍. I listened to this one as well. I also listened to one this week around Bitcoin NFTs, around the Ordinals Bitcoin NFTs, which was very, very good. So maybe just a little bit of background for our community so that they get to meet the Bankless community if they're not already members. A little bit about what you guys do.
Ryan, want to go for it?
No, you do it.
Okay. Yeah, Ryan and I sort of met on Twitter, made the Bankless podcast, and then eventually made the company later that same year in 2020. And we just thought that there was a missing supply of educational content about what really is at the very base of this whole entire industry. And so we call ourselves a thesis-driven media company. We are definitely not journalists. We don't pretend to be unbiased. We have ideas and aspirations about what we want this crypto industry to become. And we are doing that through education. And so I think we're pretty adaptable. So we talk to people like Vitalik and Justin Drake about deep protocol level stuff. We'll talk NFTs with some of the culture people. We'll talk about layer 2s. And it's all in the same vein of just like making sure that the best of this industry comes to eventually be expressed in the world around it.
David, that sounds like an _𝗏𝗍𝗍𝗍 take. Are you an 𝗏𝗏𝗏𝗍𝗍𝗍?
I was about to ask. Why is
people tell me I'm an 𝗏𝗏𝗏𝗍𝗍𝗍, although I will throw a flag at that.
You're not.
Why is there a perception that you guys are 𝗏𝗏𝗏𝗍𝗍𝗍? Where does that perception come from?
Well, I think it's because we believe, it's our position, that Ethereum and the way that Ethereum is being built is most resonant with some of the most core values that you find in the crypto space. And so we just think that the ethos of censorship resistance, of not having to trust anyone, of being a fully democratized and permissionless asset and network is just so it resonates with what crypto is to its core, and it's trying to bring out the best of what crypto can be. And I see most all other chains as more adjacent to that fact.
Yeah, I mean, I think this is the whole reason we started Bankless is to help people go bankless, right? And Ethereum, more than any other chain, has helped people on that journey. I think there are some chains that look a bit more like banks themselves, like fintech, where you imagine like the validators, the 50 or 100 validators that control the network. They're banks. Look at BNB chain. What is that? It's sort of Binance controlled.
That's 𝗟𝗍's chain. Yeah.
Yeah. This is not bankless to us. So we're really excited about bankless technology. Bitcoin is fantastic, by the way, too. We've always said that, but it doesn't enable programmability. You can't have DeFi in Bitcoin. Although you've probably seen us talking a lot about Ordinals recently,
yeah.
which is
we've gotten really excited about Bitcoin because
we are
Ordinals.
legitimately excited.
Maybe that's a good place to start. We're all here. We do want to get into the market and we do want to go into all these things, but let's talk about Ordinals. There's a big discussion around whether Ordinals is good or bad for Bitcoin. For people who don't know what Ordinals is, it is effectively labeling each Satoshi as a unique Satoshi, which is effectively, if you were to narrow it down, that makes NFTs on Bitcoin, right? And there's a big discussion as to whether these this NFT movement on Bitcoin is good or bad for the Bitcoin network. The maxis are saying they don't want NFTs on the network. It's the financial network. And then everyone else is saying, well, look, if there's a use case, there's a use case. And if people are using it, well, then, and they're willing to pay the fees, well, maybe that's a good model for Bitcoin, right? What do you guys think?
It's undeniably good for Bitcoin. I don't even understand the take that this is bad for Bitcoin. It comes from a place of not understanding the Bitcoin network. I think when people say that this is bad for Bitcoin, the most bullish thing for any chain, whether it's Ethereum, Bitcoin, Solana, Cardano, whatever it is block space sales. If you can sell block space, if there's block space demand and you're actually selling it on the market, that is bullish for the chain. And so what Bitcoin has done with Ordinals is they've increased the surface area for sales. You can see block space transaction revenue on Bitcoin like 2x up, 3x up, 5x up, like it's going up. That is bullish. Why? Because what is the product that a blockchain sells? Blocks. We say this so often on Bankless, but we have to repeat it because I think people get lost in not understanding what the core value of a blockchain is. Apple sells iPhones. Blockchains sell blocks. So this is a new source of demand for block space for Bitcoin. It's super bullish.
Okay. Joey, what do you think?
I think it's certainly positive for Bitcoin. I think the idea that certain use cases are allowed and others aren't is kind of anti the whole point of the thing in the first place. It seems like a bizarre argument for someone to take that Bitcoin wasn't meant for this. It's an open network. It's kind of meant for whatever any end user wants to use it for. So I think it's generally a positive. I mean, I haven't followed Ordinals super closely myself or anything, but I think anytime someone's actually using this stuff, especially something like Bitcoin, which hasn't really seen a whole lot of real world usage in a long time, I think it's exciting.
Why? What are the maximalists saying? What are these maxis saying about why they don't like it? I mean, maybe we should try and put ourselves into the mind space of these maxis. What is it about these ordinals that they don't like?
Yeah, I think the philosophy here is that some of the maximalist fundamentalist camp just believe that Bitcoin is supposed to be one thing and one thing only, which is sound money for the globe, sound money for the internet. All other use cases of Bitcoin are illegitimate from that perspective. And so Bitcoin is just meant to transfer Bitcoins from Alice to Bob. Anything else is adjacent and spam and just not what Bitcoin was meant to be.
Unholy,
yeah. But to what Bitcoin was meant for, that purpose is who is to say. And so one of the cultural things that I'm seeing out of the Ordinals effect is that a lot of the Bitcoin fundamentalists, Bitcoin maximalists had all of they were the king of the hill because they had all of the foundation to stand on, is because you could only do Bitcoin transfers. Now that there's Ordinals, some of the other people in the Bitcoin community have something to grapple onto, to latch onto and say, no, look what else we can do that's beyond just transferring Bitcoins. And it's fun and we enjoy it. And so now a lot of the people that were pushed out by the very, very loud maximalist camp have something to latch onto and say oh no, this is a different but novel and useful thing about Bitcoin.
What about, I mean, on the days when, on the weeks and days when we're in a bull market and the Bitcoin blocks get very full because there's lots of transactions, what about the critics that say, well, we're going to have this network, which is supposed to be a sound money network, spammed with these NFT transactions instead of the actual transactions that we need to do business?
I think to call it spam is a subjective interpretation.
Yeah, this is value transfer. I mean, NFTs are valuable. Didn't you just say in the intro that there was some NFT that was sold for $200,000? What was this? I think it's
$280,000 if I'm not mistaken.
It's value transfer, right?
It was an ordinal NFT of a wet fart. No jokes, no kidding. That's what it is. It's an ordinal NFT of a wet fart sound, and it was sold.
I mean, who are we to say that wet fart is not valuable, right? It's a subjective thing.
This is a part of the philosophy. One of the Bitcoiner philosophies that we've adopted at Bankless is that block space will ultimately become for the most high value transfers. And so if somebody is willing to purchase a wet fart and pay the gas fee, that Bitcoin transaction fee is higher than a normal BTC transfer, who is to say that transaction is illegitimate?
The market decides. It's not a religious cult that gets to decide what is holy and what is unholy on Bitcoin.
I agree. but let's quickly just go into the actual technology. So if I understand the technology, I'm not a tech geek, but the way I understand how the Ordinals NFT works is it's a different design and different structure from the Ethereum NFTs, which is a different token standard. This is, if I understand correctly, you're almost looking at a Satoshi through a different lens, right? It's like almost like a lens in front of the Bitcoin network, and you have to look at it through the Ordinals lens to keep following the same Satoshi, right? Is that do I understand it correctly?
That's exactly right. Yeah. So you make the smallest denomination of Bitcoin possible, one Satoshi, and then through the Ordinals protocol, you can ascribe data to that one Satoshi, and the UTXO, because Bitcoin's a UTXO model, that Satoshi gets tracked because it's a separate UTXO from all the other Bitcoin UTXOs. But with Ordinals, you have a way to append data. And so it's not just JPEGs, it's MP3s. It's any type of file whatsoever. And the cool thing about this is that if you are not running an Ordinals, I don't know if you call it a node or not, but if you're not using the Ordinal software, the Bitcoin blockchain looks totally the same to you and is completely not interrupting or interfering with any other way of interpreting the Bitcoin blockchain.
So, I mean, can you do the same functionality as you can do with Ethereum NFTs? Because with ETH NFTs, you can program the NFTs, you can program royalties into the NFTs, can you do the same thing on Ordinals?
No, it's just Satoshi transfers. So it's a Satoshi transfers plus data. There's no royalties. There's no OpenSea. There's no exchange. So I believe people once upon a time were exchanging Bitcoin Ordinals using a Google Doc, which is ironic because previous Bitcoin or Maxi FUD against Ethereum was that you can do everything you can do on Ethereum inside of a Google Doc. But there is more infrastructure being built to help facilitate some of this economic activity. But it stays in line with the Bitcoin ethos, which is like raw simplicity.
You know what the ironic thing about this is? I actually think what I'm seeing here is the Bitcoin network kind of like following Ethereum's path that it already did. So this is the first realization. Oh, we can sell block space to non-Bitcoin transfers, right? NFTs and this sort of thing. And then they'll start going down the path of like, oh, well, what if we take a portion of this block space sale and we burn it? So we start like decreasing, right? I think it's a sacrilege, but like this starts to look like 𝗖𝗵𝗆𝗽𝗍𝗍𝗍𝗍, which probably, the watchers of the video knows, makes all the gas fees on Ethereum, a portion of those gas fees go to burning some of the total supply of ETH, right? This is a very I can see Bitcoin kind of moving down this path, but of course there's just very strong fundamentalist camp within Bitcoin that may not let them do it. And I'm excited about this. It's cool to see Bitcoiners get excited about NFTs, but I'm also like, I've got the popcorn out, man. And I'm just like, what's going to happen next? Like, I'm loving it.
I'm just happy that the non-maximalist camp has something to grapple onto, and like they finally have a voice now.
I agree. All right, listen. So let's go to the next part of the show because I think we've got what we need out of that one. I think the best way to ask this is,
the pump? Always, guys, respect the pump. I respect the pump in all assets. Why? Because it's kind of like karma. The power of the pump always comes back to you if you respect the pump of other people. It's crazy, but
the question is, do you respect the pump? I mean, I think about what I'm asking here is, we've had Bitcoin going. We've had an amazing year. We've had Bitcoin up like 50% this year. No, is it 35% this year? We could just go back to the beginning of this year. I think it was somewhere here. And we have Bitcoin now up 44% this year. Do you respect the pump? Do you think that this is the beginning of the next bull market? Do you follow the theory that, it's playing out very much like the 2019 fractal? Or are we talking about the biggest bull trap in history and the 𝗟𝗍𝗱𝗏 camp, for lack of a better definition? Joey, I want to hear your view here because you guys
Joey's been here the longest,
and everything else.
Yeah, I mean, sure. I mean, from my perspective, I think the market, at least my view, is it bottomed in June of 2022. If you look back in June, ETH hit a low of $880. It's one of those kind of market moments where, like, as a trader, like you have like this emotional feeling that the sky is falling, and like that's usually when the market bottom forms. And then so now the question is sort of just like, are we like overbought currently relative to like where we should be? Is kind of like the question that you would ask, but I don't think there's going to be like a new lower low. That's my personal view. And I think if you kind of chart things, there's sort of this trend that the market's been trending in since November. Where currently kind of the upper end of that trend is like the mid 1700s for ETH, and the lower end of the trend is kind of the low 1300s. And my view is, and that trend kind of steadily, grinds up. My view is that it's just going to steadily kind of grind up over the rest of the year, but bouncing between, the highs and the lows of that trend. And, this week we kind of tested the highs of the 1700 range, and, over the last 24 hours or so have come off that a little bit.
Okay, pretty interesting. Guys, what do you think?
I think the two main things is that both this regulatory FUD, which I think we've completely bounced back from, but then also FTX at large, were inorganic sell pressure. Regulatory FUD never lasts. I've never seen regulatory FUD actually like have a meaningful long-term impact on the price. And like we're already back to the crypto prices that came before all of this SEC ban hammer stuff happened. And then with FTX, I think it's going to take a while to repair that damage, but like the selling at sub $1,000 ETH and sub $20,000 Bitcoin, I think was a short-term fear. I mean, I'm not going to pretend that I know exactly what happens with the markets, but I think the worst is over.
I largely don't want to be the bear in this episode, because like I agree with you guys. Like there's some good signals. The SEC is like cracking down on crypto, and crypto's like not blinking is actually pretty impressive. And that's certainly not what you'd expect in a deep bear market. And I do think there's elements of like, oh, this looks a lot like 2019. Or like, back in like 2016 or something like this. And we see this repeating fractal over and over again in crypto in every cycle. That said, there's part of me that's just like, but guys, have we really felt the pain of the bear yet? Like this one hasn't seemed as painful.
I don't know where you were in May last year, and
Ryan forgot to set his 3-digit Ether buys.
Luna went to yeah, okay, that's what you think, David. Luna went to like 0. I mean, yeah, of course. Like, weren't people kind of expecting this is an algorithmic like coin? I know people who are in Luna lost.
Luna went to 0 and wiped out an $80 billion ecosystem, which I've been in crypto since 2014, 15, and I'd never seen that happen. From that point, you had 𝗃 Capital implode, and with it taking down a lot of the retailer basis funds, which were locked up in either BlockFi, Voyager, or one of the other lenders. Then you had Genesis going down, freezing all the earn money. Then you had FTX wrecking 10 million retail consumers. I think that both from a time point of view, 433 odd days of a bear market, and from an event point of view, and I say event point of view, like you need two things to shake out weak hands. You need time and declining prices. You need three things: declining prices, time, and then black swans. And I think we've had like all three of those.
Yeah, I get it. It's like, but here's the thing: is what was the down from all-time high for Bitcoin and ETH? It was like 75% or something like this. 75%, maybe 76%. That is not nearly as painful as previous bear markets. What did like last cycle bear market from all-time high? Bitcoin dropped like 83%, 85%. Ether did 95%. I understand for some of these alternative layer 1 communities, like they're down like 97 plus percent.
First cycle chains always go down way worse.
Yeah, but what's interesting is
that's what I was about to say.
We haven't felt the pain in the blue chips. Yeah. That's all. It's just in the back of my mind of like, well, has this been long enough? Have we felt enough pain?
Joey, what do you think about the pain theory?
Yeah, I mean, I think it depends on what assets you own. I think there's certainly been a ton of pain. Like for instance, if you held on to, a bunch of like, DeFi blue chips over the last 2 years, like versus ETH, you felt a ton of pain on that trade. And, I think that's one of those things where I think like at some point into the next cycle, there'll be a great trade to like revert into that and buy a bunch of DeFi stuff, right? Like, I don't know if that's today yet, but I do think that's going to come at some point. I also just think this market cycle kind of maybe moved a bit faster than the last one, both on the upside and also on the downside. Not like a lot faster, but maybe like, 30-ish%, more sped up than previous cycles. I think a lot of that had to do with the fact that, rates went from 0 to well above 4% in the span of a year. And and so I think like it was certainly painful for a lot of people. And I think, you know, like if you remember kind of Bitcoin in 2011, there's one point when, you know, the price went from $20 to like 2 cents because Mt. Gox got hacked the first time, right? It's like every cycle is generally, you know, the sailing gets a little bit smoother. But if you were like an average person who came in, whether you're institutional or retail, and, you know, bought ETH and then, you know, it went down 70% or whatever this cycle from peak to trough, like that still feels pretty painful. Even if for, you know, some of us on this call, we remember the days when ETH was down, you know, from $1,200 to $80, which was definitely an experience for sure.
I want to throw something out there. So one is that I think we've just become immune to big price swings because we've been here for a while. And I think for, like you say, the normal investor, the normal institution, for them to see swings like we saw last year, I think we've just become immune. So we've seen worse. Second of all, I think it was what David said, that first generation or first round layer ones usually experience much bigger drawdowns. And as assets become more adopted and more mature, you can kind of expect their drawdowns to maybe be slightly less. So I think, you know, if they used to go down 90% in the first bear market cycles, then to have them going down 75 and maybe 80% in the second market bear cycles is actually like quite fathomable for me. Like to almost say, I think we had suffered enough. I also think that if you take all the news that we've had, and like there's, you know, all the bad news that we've had, I think what we've had a token transfer from weak hands to strong hands. And I call the strong hands the retard degens who are not selling at any price and with any news. You're like, I mean, we're all a bunch of retard degens. And you can see it now because the SEC is attacking crypto left, right, and center. And what is, I think, an unprecedented attack. I don't think we've ever had an attack that's been this brutal. And people just aren't selling. We had the SEC attack Kraken, staking, Binance, or not directly Binance, but BUSD through Paxos. Bitcoin doesn't care.
Yeah. And
the reason is because the people that are holding the tokens now are retard degens and are not selling for any price. If this happened in October, November last year, if the SEC came out attacking us in October, November last year, we would have been down 20%. And I don't think we would have recovered. And so I think it's just a transfer from weak hands to strong hands, which is actually what bear markets are about. And the bull markets usually start because the tokens in the hands of the retard degens.
I do think there's elements of that I certainly agree with. And one thing that I think we'd probably all say is that crypto feels way healthier now than it did a year ago at this time, right? People getting tattoos of like chains that were destined to go to zero on their arms. You know, that wasn't the healthiest place I've ever seen this industry. It feels much more healthy. That said, I don't know if we should expect, again, if the model is like, this is like 2019, I don't know if we should expect an immediate recovery like to all-time highs and blowing past all-time highs. And in fact, I think something you just said is right, which is this is the biggest crackdown that we've ever, certainly it's the biggest crackdown in the US I've ever seen, where it's more than just the SEC and Gensler. I mean, the industry's kind of like, we're calling this Operation Choke Point, where the entire executive branch under President Biden is going after crypto in a coordinated, concerted way. You know, like one of the other choke points is squeezing out banks, for instance, and getting that, making it increasingly difficult for them to actually work with exchanges. And so if you're a crypto startup in the US, where do you get a bank account? No one will service you. It's very difficult. And so I think that there are ways that this regulatory stuff, I agree with elements of what David said, where it's like, yeah, there's a lot of regulatory FUD, but maybe we haven't felt the full effect of it. I mean, we just last week, Gensler came after a BUSD the Paxos BUSD stablecoin, basically. And then we saw out of this didn't get reported very widely, that PayPal, which was looking to integrate a stablecoin into their Venmo product, they backed away from that. They're like, well, it's getting too hot in here. Like, we need to step back from that. And that was adoption that we were very excited about back in 2022. Oh, look, a major fintech company with 30,000, vendor accounts around the world is integrating crypto. Well, now because of US regulatory action, they've stepped back from that. that's going to hurt adoption. It could take some time to recover from that.
Yeah, but this is all like innovation. So this is actually going to be one of the few times that I disagree with my co-host here.
That's
like,
why we have to disagree on someone else's channel. We don't do that on our channel, right, David?
Yeah, no, we're homogenous on our channel. So like, all of that stuff is real things to be concerned about. I'm not discounting that, but like when it comes to prices of assets, what you're talking about, Ryan, is like innovation and adoption in areas that we have not already gotten adoption from. But people aren't being restricted from buying assets. And so the flows from, US dollar and TradFi into crypto is still unrestricted. Like you can still transfer money to Coinbase and buy Bitcoin and Ether and do whatever. And so like, while this is a tampering effect on the speed of innovation, we're still able to buy crypto. And so like buying stuff is still on the menu.
They can buy stuff, but utility is different.
Yeah, I want to just push back and say exactly that. So the first thing is you actually are getting a bit more restricted, because if they take away your stable coins, which is what they started doing with BUSD, if you start thinking that stable coins aren't safe, that's a big reason not to put money into crypto if your stable coins may get taken away. Another thing is that if you are restricted from staking in the United States, if you all of a sudden you can buy Ethereum, but you can't stake it, or you can buy Solana, but you can't stake it, then the incentive to buy the tokens becomes slightly reduced. So I think it's not direct. And also we know that the banks are severing relationships with crypto exchanges. In fact, just now, while we have been live, this came out, it says Binance Holdings explores severing business ties in the US. And that's according to Bloomberg. This is happening like now as we speak. What happened from the day that Biden stood up and said he wanted an executive order to regulate crypto and to keep the US at the forefront of this innovation? What happened between then and where we are today, where the SEC is coming out with pretty much an announcement today? In the last 2 weeks, Kraken attack on staking, by BUSD. Last night there was the Do Kwon arrest warrant, and if you look at the not the arrest warrant, the charges by the SEC, and if you look at the charges by the SEC and you read them very carefully, they point to the fact that many other stable coins may actually be securities. Like if you read that SEC document, and they say that one of the reasons why UST was a security is because it was redeemable for Luna and the other way around. And they're saying by virtue of that, it is a security. And if you look at that, then you compare that to MakerDAO or to Maker, then it's not very different. It's not very different. So it feels like somewhere something happened, and maybe it was FTX, but what happened between the day that Joe Biden stood up and said, keep America at the forefront of innovation here, and today where Gary Gensler is pretty much shutting down the US when it comes to crypto?
I would be really interested in Joey's take here too. But like, maybe you start, Joey. I've got some takes on this.
Sure. I mean, I think one thing that I remember from the last cycle is that there's this period sort of in the second half, closer to the final third of a bear market, where there's a huge flurry of regulatory actions, and everyone's like, oh man, like the space feels screwed. Like the government just hates it. And it's kind of like, this kind of like exaggerated perspective from both sides, both I think from like the regulators, but also from the people, reading these actions. And then usually what happens is, unless you did something very illegal where it's like DOJ swoops in like FTX style, right? Ignoring that, all these other cases, they tend to be things where the legal system in the US takes a really long time to play out. Like the Ripple case, I remember last cycle, like the Ripple case is still playing out. There's still no actual answer there. And everyone's like, oh, this means that tokens are dead and there's never going to be, new token launches again. And I remember people saying that. And I remember just continuing to invest in new token deals because I was like, it just seems wrong. And I think like we're sort of at a similar moment. The one big difference this time is that, a lot of the crackdown seems to come directly from the president of the United States. Although last cycle, like when Trump was president, he also wasn't particularly pro crypto either. He didn't really go around like, announcing it publicly. Like he didn't have like a public, like action plan or whatever, that like Biden proposed. also because that wasn't really Trump's style. It's not like he really had super thought through action plans for things per se. But if you look at what actually happened, not a whole lot happened last cycle. I think a lot of these things, 75 to 80% of these regulatory things are going to blow over, and there will be 20 to 25% that actually something serious happens, like the Paxos thing. Who knows if the Paxos, stablecoin is still around a year from now? I have no clue. I'd be very surprised though if they succeeded in, say, shutting down like USDC, for example.
So you think that this is not an attack on stablecoins, but more an attack on either BUSD or Paxos, or the way that Paxos created BUSD? You're not worried that that's the first one, and there were a whole lot of rumors, and they were obviously just rumors, but that USDC is next, and then who knows what happens after that?
I mean, I think you have to worry about that stuff, like both as if you're Coinbase or Circle, and also if you're an investor, right? Like it's important to worry about things and think them through and do stuff to mitigate the worry, right? Like if you're Coinbase, I want to be super dialed in to make sure that I'm not doing any of the stuff that that Paxos or Binance were doing. But I think there's a point at which you kind of do what you can to mitigate a risk, and then you weight that into your investment decision, and then you make a trade accordingly, or you make a business decision accordingly, and then you kind of have to move on, right? Like I think a lot of people in this space, they kind of obsess about what the government's going to do next, and it's just like it's not helpful. It's like obsessing, like if you made a mistake and obsessing over and over again, you're not really going to figure anything out. That's kind of my view there.
Let's look at things like the banning, not the banning, because they didn't ban staking, but they deemed Kraken's staking offering as a offer of securities and unregistered securities. We also know that there was actually no ways for Kraken to register their securities offering. Just 𝗕𝗬𝗕𝗬𝗍 admitted it in her public dissent, that there was just no way for them, despite what Gary Gensler said on CNBC and all the other TV channels, there actually was no way to register it. And I saw the tweets from Jesse where he said, oh, well, I think, let me try and find it for you, because I think he actually did quite a good job.
He said something like, if all I had to do was fill out a form, then we would have done that, right?
Mm-hmm.
Yeah, he said, oh man, all I had to do was fill out a form on a website and tell people that staking rewards come from staking. Wish I'd seen this before paying a $30 million fine and agreeing to permanently shut down the service in the US. Gosh, 𝗕𝗬𝗕𝗬𝗍. Look, I mean,
God, Jesse's so awesome.
Look, I mean, is this an attack on Kraken? Is this an attack on staking? I mean, what is this?
You asked the question earlier, which is like, oh, Biden said, hey, we support innovation, and then like, what's changed now? This is why we're still living in the hangover of like 2022 scammers, right? Okay, so like we've got like 𝗟𝗏𝗪𝗏𝗍𝒪𝗏𝗍, we've got Kwon, we've got SBF. Let's realize that the U.S. government, like all other governments around the world, has been somewhat divided internally of what should we do with crypto. There's those in the camp that are like, let's ban it, and I want more control. And there's others in the camp that this is innovation. This is, a liberty for our citizens. This is going to help our country, right? These sides have been fighting against one another. Well, in 2022, we just gave the side who wants to come crush and control crypto much more power. Okay, so even this thing with Kwon yesterday that we saw, Gary Gensler's next strategy is really to go after Kwon and UST because he knows no one in crypto will defend them. How can we possibly defend that? It went from $40 billion to zero. How can we defend it? And he's going to use that to establish precedent. You can already see it in kind of the papers that they filed. Gensler wants UST to be characterized as a security. This is a stable coin. He wants it to be characterized as a security. So he's going to use this case to establish precedent, to increase his power, to try to crush crypto. This camp has always been active in the US government, other governments around the world. And because of 2022, we just gave them a whole lot of power to go do that. No one's going to stand in their way. Is anyone pro-crypto in the Biden administration going to say, you know what? I think that crypto thing is full of wholesome people, right? like look at 2022. What happened? What did we do? So there's an element of like, I feel like, and look, it was our worst actors, but I feel like the crypto industry shot itself in the foot in 2022. And we got like, now we're living with that hangover. I guess if you shoot yourself in the foot, we're in the hospital on like kind of like getting the morphine drip. Like it's not a good time for us, and we have to get through this period of time. But I do agree with Jesse, with Joey, that we will get through this.
I really just want to emphasize like how important public sentiment is on the timing of these things. Rand, you asked like, all right, why is this happening now? Like, and you mentioned like FTX. It's absolutely FTX. Like Operation Choke Point started 1 month after the demise of FTX. That's when started the constriction around the banking sector really started. 2 months after FTX is when the SEC comes with its ban hammer. Public sentiment and what government regulatory bodies can get away with is super important, and it's largely adjacent from what is actually the rule of law and what is right. If they can get away with it, then they will. And right now, Gary has wide open room to take in a lot of increase his domain of influence and control, which is what he wants to do. Have you seen the guy's influencer videos? He really cares about what people think of him. And right now with FTX and Kwon, like Ryan said, like in to use your words, Rand, we had the retard degen steering the ship all throughout 2022. And that just gives people like Gary Gensler free reign to come in and say like, oh, well, you guys need to get reined in.
Well, they got to look like they're busy. They got to look like they're doing something, right?
And Gary needs to save face because he let all that stuff happen.
He also met with FTX the entire time, apparently. I mean, so there's like a whole. It's just. It's incredibly shady and disappointing what's happening with our regulators. But 𝗪𝗄𝗧 is one of the good ones, and there are still some folks like that in government.
Yeah, we've spoken to her many times. The problem is she seems to be a little bit powerless in the big scheme of things. I remember she wrote the public dissent the first time around when the ETFs were denied, and she said I can't see any reason why they allow ETFs on oil and gold and everyone else that's completely manipulated, but they won't allow an ETF on Bitcoin. So I was an investor in Luna. Joey, I think if I remember correctly, the firm you were at the time was also an investor in Luna. There's some serious allegations against Kwon in these documents. One of the allegations is that I want to get this right. The defendants still retain valuable proceeds from the Terraform ecosystem. Specifically, defendants transferred over 10,000 Bitcoin from Terraform and Luna Foundation to an unhosted wallet or cold wallet. On a periodic basis since May 2022, Terraform and Kwon have transferred and continue to transfer Bitcoin from this wallet to a financial institution based in Switzerland and have converted Bitcoin to cash. And this goes on. It says between June 2022 and date of this complaint, over 100 million in fiat currency has been withdrawn from that Swiss bank. Now, I must say, I was under the opinion that Kwon was innocent. I was under the opinion that he tried to reinvent money and that he failed, that his idea failed. Maybe I was giving him the benefit of the doubt, but when I read this, it kind of paints a completely different picture. What do you think, Joey?
Yeah, I mean, I think like, reading that, like assuming it's true, it's obviously a very different picture, right? Like if you think about, traditional markets and you think about kind of like the creation of like electric vehicles, right? Like you have some companies like Tesla that work really well. Maybe that's the equivalent of Ethereum in crypto. You have some companies like Fisker that just like didn't really work, but they kind of tried. And that's sort of what my view of kind of what Terra was doing, up until, you kind of see these documents and you kind of see kind of more that's come out since then. It kind of looks more like Nikola Motors, right? Like there's something like actually bad beyond just like, I basically what I say is like people should have the right to try ideas, even if the idea seems like low odds but high EV if it does work. But like this document that you just shared, right? It says that he basically like, stole capital, sent it to a Swiss bank account, for his own purposes.
Where did he get that?
That's true.
Where did he get that 10K in Bitcoin?
So they got that they took the Luna Foundation Guard, which was kind of the foundation, took $3 billion, if I'm not mistaken, and they bought Bitcoin with $3 billion worth of Luna in their reserves. And that was supposed to be used to defend the peg. Right. And the reason why that happened is because a year previous to that, Luna depegged, and it was rescued by who we think was Jump Capital. We may be completely wrong. That's part of the SEC's allegations. And so they bought a whole lot of Bitcoin, and it sounds to me like these 10,000 Bitcoin came from the Bitcoin that was supposed to be used to defend the peg.
But isn't this like the dumbest shit ever? Like, so, okay, so
Not if you're secretly a scammer, Ryan. Then it's genius.
no, but see, here's the thing. It's like this entire industry was created. The reason we're all here is to kind of go bankless, and so that we don't introduce trusted intermediaries. And then we have this protocol here that everyone is so excited about with 10,000 Bitcoin deposited in kind of a multi-sig, a group of insiders. And like, we have smart contracts.
A bank.
Right? A bank, basically. We have smart contracts. We have things on chain. We have control systems so that we don't have to trust people. We say so often, like, it's protocols, not people. That's what we're putting our trust in with crypto. And I feel like in 2022, we forgot some of that. This is why we were suspicious of Do Kwon and Luna from the beginning. We had no idea whether he was a scammer or not, or what his intent was. Had no idea. But the fact that you're introducing a trusted intermediary to like safeguard tokens to back the value of UST, that should throw up red flags. And I'm really hopeful that we as an industry and as a community learn something from 2022. And we go back and there's like, they're going to come back here, man. Like the scammers, the same people,
they're going to do it again.
Every cycle, they're going to do it again. And so for people who've been here for a while, we're always just like shaking our heads and been like, guys, we did this again. Like, when are we going to learn? We actually have ways to defend against this.
Ron, remember when we did our show about Terra Luna, and we brought up this point about like, why do you need to defend the peg with external capital? That is an unstable financial system, and we just got hounded by the Terra Luna community, the lunatics for bringing that up. And I want to make this point that I think a lot of people are sleeping on this point. Where did they get the 10,000 Bitcoins? They minted and sold both UST and Luna. They sold it to 3 Hours Capital. They sold it to a few other people to source this supply of Bitcoin. And they bought it at something like a $34,000 Bitcoin price. So they sold UST. They sold significant amounts of the UST stablecoin for Bitcoin. What does that do? That takes liquidity and value out of UST. It takes liquidity out of the market because they are selling UST into the market to buy Bitcoin. And then they're putting it on the Luna Foundation Guard balance sheet, with a claim to that is going to be used to defend the peg. That selling of UST is what caused the peg to break in the first place. They took all the liquidity out of the market, and then all of a sudden, whoever like did the economic attack on UST to attack the peg saw the weakness in there wasn't enough liquidity to defend the peg, because they sold UST they minted and sold UST. And so then the markets drop. Bitcoin goes from $34,000 where they bought Bitcoin down to the $24,000, which is when they had to start selling the Bitcoin to defend the peg. They caused their own stability in their economic system. And then meanwhile, Do Kwon is off withdrawing hundreds of millions of dollars and is off in Serbia somewhere. So like when we look at hindsight on this whole thing, like this whole thing was doomed from the get-go.
I must say, for me, the biggest thing that I took out of that is in 2021 and 2022, we made a whole lot of investments. I call them momentum investments. We weren't investing in fundamentals. We were investing behind momentum. And it happened to me in 2017 too, unfortunately. And after 2017, I swore I'd never do it again. And in 2021, I got caught up in the same hype and I made the momentum investments. And one thing that I took out of momentum investing now is I'm here because I want to invest in decentralized protocols. Now, it's okay if a protocol starts off being not decentralized, as long as there's a really tangible plan to eventually land up completely trustless and decentralized. And if not, then I don't want to be in it, because every time that we've seen that, they've collapsed. You take Celsius, this hybrid between a centralized entity and a token, you see where that landed up. You take FTT and FTX, the hybrid between a centralized entity and a token. Well, look where that's landed up. And so to me, it's changed the way that certainly we're looking at investments. And speaking of that, I'm actually watching the Lido chart here. That's where my eyes have been, because Lido is at $3.10 or 8 cents, and it's just broken through this massive August resistance, which it's been flirting with for a while, and it looks like it's doing very well. And the reason why I bring that up is because Gary Gensler attacked retail staking via Kraken. Now we've got this narrative that has been brewing for a long time, which is the liquid staking protocols. So things like Rocket Pool, things like Lido, etc. And at the same time, you've got the ETH Shanghai upgrade, which is happening sometime in the next 2 months. So let's say they say sometime March, April, but let's say in the next 2 months. I want to understand why the liquid staking protocols are running so fast ahead of the Shanghai upgrade, because there's two ways that I see it. The one is that you've got all these ETH that have been staked for a long period of time, which are now going to be unstakeable, which could put selling pressure on ETH. On the other hand, you got these liquid staking protocols going up, going, well, you know, when Shanghai happens, everybody's going to want to stake ETH, right? Is that the right thesis?
I certainly think so, and it's also worth noting that today Coinbase made an announcement that Coinbase Ventures made an announcement that they made a material investment into Rocket Pool, into RPL. So like Rocket Pool is almost at dollar all-time highs, which is pretty cool. And there's like a defense here. The decentralized protocols are much more defendable and defensible against what Gary Gensler and the SEC has been coming to attack Kraken. Like there's a reason why the SEC went after Kraken and not Coinbase, because Kraken did some extra finesse around their staking product to make it a little bit more valuable, but it changed the nature of the product. And so that's why that opened up a weakness for the SEC, for Kraken to be attacked by the SEC. Things like Rocket Pool and Lido are the exact opposite of that. They are trying to be the truest, most high fidelity connection between depositors and actual staking of Ethereum. And so that's why these protocols are running, probably because like Kraken's going to shut down their product and all of that stake is going to go elsewhere. But also, like you said, Ran, we have the Shanghai withdrawals coming. And so a lot of, like Ran and I are calling this like the snow globe effect in the staking world, where now people can withdraw their locked deposits out of whatever staking as a service provider they have, and that can get reshuffled. So right now, people are playing this game as like, all right, like Lido's got a lot of stake. Are they going to be able to hold on to that stake? Is that stake going to migrate to Rocket Pool? What about like the long tail of staking providers? Are they going to get any new stake? What's going on? And so like that's kind of the meta game that's being played right now.
$10,000 to invest in one staking protocol today. You have to put the money into a staking protocol. Where do you put the money in? And if you're looking for price appreciation?
Well, Ryan and I are biased because I want to hear from Joey on this one.
Yeah, that's a good question. I mean, I think like my view would probably be Lido. I think it just has really strong product market fit.
What about the fact that it's already got a 70% staking share, and that, you know, when you've got 70%, it's kind of down only from there. I mean, you're not going to go to 90%, are you?
No, I don't think so. I'd be surprised if the market share went up substantially from here. But it's more that I think the amount of staked ETH is going to go way up post Shanghai, and I think staking derivatives like just become a lot more compelling once the ETH is actually unlocked, right? Because the unbonding period, to date, like nobody has known when you can unbond, and post Shanghai, you'll be able to actually unbond your ETH once you stake it. And so the market for like staking derivatives will get a lot more efficient. Like to date, it's basically been based on, you know, people providing a ton of liquidity. But if there were a run on the bank, like you'd have to really wait until Shanghai happens to get your ETH unlocked. I just think these products become a lot more compelling. Like if you're like an institutional investor, you're probably not going to put a ton of money into staking derivatives right now, because there's that risk that there could be a run on the bank, and then you have to mark, you know, your funds down a lot at the end of the month if you know, like staked ETH trades at a big discount. And post Shanghai, that won't happen. So my view is that there's going to be a huge influx into staking derivatives. So even if their market share stays constant, the overall market is going to grow a huge amount.
So would you be allocating capital at this stage to the staking narrative?
I mean, I think like my view right now is it's sort of like bought. I think you might be able to like in terms of you mean like the actual tokens behind these staking derivatives, like
Rocket Pool, Lido, Fract, DEXes.
Yeah. I think that's kind of overbought recently. I'd probably wait for a buying opportunity over coming weeks. That's just my personal view.
Ryan, what do you think? Would you be putting? Well, let me ask you two questions. One is, if I gave you $10,000 and I said you have to invest it into one of the staking protocols, you're saying you're going to go into Lido?
Not me. No, I wouldn't do that. I think Lido's cool. I think RPL are cool. I do agree with Joey that some of these narratives are kind of overbought. I'd look for some of the smaller market cap ones that have incredible teams building some momentum. I haven't looked at like StakeWise recently, but like that's 150 million, 160 million, a fully diluted valuation.
Lido's V2 announcement looks a lot like what StakeWise has been doing for a long time.
Frax, I would go down market, and I'd really be evaluating kind of like the teams and growth trajectories, and try to, with the 10,000 that you're going to pay me. And I appreciate that, Rand, that you offered to give me 10,000 to invest in these things. That's fantastic news. I would go, and I would probably play down market with some of the smaller market cap things. There's also a bunch of staking networks that have not launched tokens yet and are kind of pre-launch. So like, I don't know, there's like 20 or 30 kind of entries.
Startups.
And so there's a lot of opportunity if you can kind of go down market and look at these teams and evaluate what they're building and see if they have early traction.
So I heard from someone who's quite reliable. He told me that there's a court order in the US to force Lido to hand over some information around staking to the SEC. Now, I don't know whether that's true or not, but is there any way that they could subpoena court records from Lido? As far as I understand, Lido is a decentralized.
Yeah.
So I want to understand this. I want to understand the nuances here. Lido is a decentralized staking protocol, which is decentralized. If the SEC were going to serve a court order on Lido, where and who would they serve it on?
That's a really good question. Lido has, I believe, 29 different operators, so 29 different depositors all over the world. And then there's also the Lido governors, which are some of the early investors. Paradigm, I believe, is a big stakeholder of Lido. But Lido does not have an office. There is no address for Lido. I don't know where you mail that subpoena or wherever.
Well, you just tweet it out. They're doing that now.
Well, that only works for 𝗟𝗍𝗘𝗫.
I mean, like, so here's the thing that we all have to realize about Gary Gensler, I think, is this man has no line. Like if Gary Gensler could go say that 𝗧𝗿𝗆, as staked ETH, the Lido tokenized staking product, was a security, he would. If he could do that with RPL, he would. I'm now convinced of this, given his actions. I don't know if he can. I don't know if that's defensible, but like, we have to think through the implications if something like that happens. Does that remove liquidity from the market? Like, what does this do? This is the thing, is some of when the Kraken staking news broke, some people were like, well, isn't that great for decentralized staking? I'm like, yeah, but also it's not. Like, let's remember, Gary Gensler is not crypto's friend. He doesn't really care. Like, if you looked at his influencer video, he wasn't like Kraken staking is bad, but there's great decentralized alternatives. He didn't tell us about any of that. He was very focused on, staking being like investor protections and control around staking. And I think he'll continue that. So I don't necessarily think this is good for decentralized staking providers, because I have no assurances that Gary won't come after them next.
What about the AI narrative? Is it a real narrative in crypto? I mean, you've had these AI tokens absolutely explode. I mean, I looked the other day at SingularityNet, which is, I guess, one of the OGs in crypto. So let's just look at it this year. So I think let's just quickly go to January, and we'll take the gains this year. It's done 800%, 830%.
Yowzer.
Okay, I mean, that's just one. There are a couple of others. There's a Fetch. I think it's Fetch.ai. I think it's also done about. Here we go. So let's just take it. We'll take it from January just to be fair on all. 400%. Is this a real narrative, or is this the next thing that's going to go up and all the way back down?
I mean, yeah, it's a real narrative, and that it's a narrative trade. It's a momentum trade. Each one of these tokens has various levels of relationship with actual AI. Like, there's tokens like 𝗍𝗵𝗏𝗍𝗍, which is uses AI to like have economic models, but it's the economic model that's the value capture. So like, to what degree does the actual like AI create upwards exposure in one of these tokens is always dubious. Some have it more than others, but this is very much like, oh, ChatGPT, buy AI tokens. That's all this is.
Would you short crypto AI at the moment? Would you?
Oh, I would never short any crypto asset ever. I will not never. That is a dumb thing to do.
Ryan, what do you?
I mean, shorting any asset in crypto is just like, I mean, do you hate yourself? Like, how how fast you want to blow through your money. Don't ever
right.
like. But what
There are,
David said-
like you said, there are redacted degens that
I
you're
will never
trading against.
look.
You
I
don't
would.
want to do that.
I was afraid to short Luna. I wasn't even shorting Luna.
People got
after we
liquidated
found out.
shorting Luna while it was crashing.
Yeah, don't short in crypto. To anyone listening, if you like value your money, don't short anything in crypto.
But you wouldn't put money into it. You wouldn't now deploy money into the crypto AI
No, it's
narrative.
just because there's different time horizons, right? So I'm not a narrative trader, right? So you can be a narrative trader, which means like you asked if this is a narrative. Yeah, it's a narrative. And it would have been nice to be in on that narrative, a few months ago, but it's a narrative trade. There's not actual fundamentals or utility backing this. That's what everyone got so excited about in 2021 and 2022 is a whole bunch of narrative trades. And that's why we're in the spot that we're in. So I don't personally play the narrative trade game very often, or if I do, it's with a tiny portion of my portfolio, and it's not, it's just narrative hunting.
Joey, what do you think? Would you put money into the crypto AI narrative? Have you seen any crypto AI companies that you think are worth investing in?
Yeah, not really. I mean, the only thing, somebody already mentioned it, is like 𝗦𝗵𝗲𝗍, which is interesting, but they've been around for years, right? Like, they've been around since 2017, and so it's not really part of the current AI wave.
So 𝗦𝗵𝗲, just for people who don't know how it works, and correct me if I'm wrong, you submit AI investment models. 𝗦𝗵𝗲 then, if it likes your AI investment models, allocates a certain percentage of their funds or their treasury to your strategy. So it's almost like a fund that is powered by AI models, and anybody can submit a model. Let's say anybody. I think there are certain hurdles that you have to get through, but if you can backtest it and show that it works, then they allocate money to the model, right?
Right, exactly. Yeah, but it's not the AI again. Like it's a second order effect of the thing. It's not the main thing.
Okay. The other narrative which has exploded this year is the decentralized perpetuals DEXes. So you've had DYDX explode. You had Gains Network. I don't know if you guys saw Gains Network today, but there was a Binance listing which was announced, and that I'll just show you what the chart looks like. It went up to $30. I mean, it's back down.
Damn, that is a needle. Holy hell.
Yeah, that happened this morning when we saw the Binance listing. Look, it's done amazing since the beginning of the year. This has gone up. I mean, 3x this year. So I mean, there's a clear narrative around these perpetuals DEXes, and it feels like, if you just mention the word perpetuals DEX and you mention the word Cosmos or Arbitrum, then you can basically print money. But on the other hand, the one thing that I did notice about these things is that they are real businesses. I want to just show you something. Like everyone looks at this chart over here, which is the crypto fees chart. But what you can see here is that you can see like protocols like GMX are now averaging about $1 million a day, $1.2 million a day in fees. I mean, that's
right here is fundamentals, though, Rand. Like this right here, that what you're looking at, this is fundamentals, and so I think we see some of that in crypto derivatives.
I don't know if too many people know this. GMX has been printing insane fees. GMX is one of the few tokens that was actually green in 2022. Could you imagine that?
Like on the price, right?
On the price, on the US dollar price.
Yeah.
What's his name? Andrew Kang, I think, has some insane percentage of TVL in GMX, and he opened up either a 10x or like a 50x ETH long at the bottom. Put, I think, $1 million into a 10x long, and is up like $9 million since in like 4 months or something.
He went long, he cut the long, and he went short, and then he cut the short and he went long
at the right time.
Well, the short wasn't at the right time, but he was quick enough to get it up. But I mean, look, for me, this is a narrative, because this is a narrative which actually generates fees. If you look at the biggest companies in crypto right now, it's the leveraged exchanges. I mean, who makes the money? FTX made the money. Binance makes money. Binance is not making money on spot. Binance is making money on their perpetual leverage rates. Bybit is making money. BitGet is making money. These guys are all making money on derivative trading. And now the decentralized derivatives players do seem to me like a healthy narrative. What do you think?
I'd be interested in Joey's take on this. He's very deep in DeFi stuff.
Yeah, the decentralized perp stuff is a narrative I've been interested in for a while. I never really thought it made sense that you had to have businesses like FTX, right? Like that should be decentralized. And if you look at stuff like Uniswap, it's pretty easy to trade spot on Uniswap. There's no reason why there shouldn't be great decentralized perp exchanges. and I think GMX is like kind of right place, right time. Like they built on top of Arbitrum, which enabled, enough scalability gains where it finally became feasible to use it as like an average retail user. It's still difficult to use, which is why the market cap isn't like, 7 billion as opposed to 700 million. But it's certainly something I'm excited about and bullish on that sector.
Are you excited about Oracle's based perpetuals protocols as much as you're excited around DYDX types perpetuals protocols, like buyer versus seller versus Oracle based perps DEXes? Which one excites you more?
I mean, I think buyer versus seller ones are kind of more exciting long term, and I think like if what I believe is I think the decentralized perp market will eventually one day exceed the size of the centralized perp market, and at that point, like you want to have your own market set the price. Like you don't want to be like referencing some external market that's a smaller market, because bad things can happen in finance when you do that. And so I think long term it'll trend towards buyer seller, but yeah, the market has quite a ways to grow.
$10,000 now to put on any perpetuals DEX that you like on the market. You got to bet your money onto one. You put it into DYDX, you put it into GMX, you put it into GNS, you put it into one that we haven't mentioned it, but you got to allocate your money to one. Where do you allocate your money?
I would put it in GMX. I think it's like great risk reward. The market cap's much smaller than DYDX, and the economic model is like more straightforward from a token holder standpoint than DYDX. Like there's still a lot of lack of clarity, I'd say, around DYDX's model. So I would go with GMX.
David, what do you think? $10,000 into the perpetuals DEX narrative. Where do you go? Where do you put your money?
Yeah, GMX, without looking too deeply into it, GMX sounds right. Not into DYDX, because they want to do their whole like app chain thing, and they want to pay for their own security, which means they have to issue the DYDX token to start to pay for security. GMX doesn't have to do that. So like just by analyzing that.
I think you're just salty because you're an 𝗧𝗍𝗃 and because DYDX.
No, I'm sorry. No, is that bad analysis? Like they have to issue DYDX to pay for security, and GMX doesn't. Like that's just raw economics.
All right, Ryan, what do you think?
I think Joey's really smart, so I would say 10K to GMX. I also think David's very smart too, by the way.
You haven't said anything about me. I don't know how to take
Man, we're just getting to know each other. You seem pretty smart too, though.
Yeah. All right, listen, guys, I don't want to keep you. I know you guys have got things to do and places to be, but I do want to thank you because it's been a really fun show. So first of all, to the two of you guys from Bankless, welcome to the Banter fam. Loved having you guys on. And to the Banter fam, please show them some love. There is a link below to their channel. You see this number over here, which is 193,000 subscribers. We have to get that to 200,000 subscribers by the end of the year. What I want you guys to do, I'm gonna wait because I can see there's 4,400 of you here now. And we need to watch this number go up. So go there now. It's YouTube at Bankless and just subscribe. And we need to see the number go up live on the show. So go. I'm waiting. Go now and subscribe to their channel. Trust me, it is one of the best channels in crypto. Go. Guys here in the office, go and subscribe too. Everyone must subscribe. Fam, I'm counting you to go and subscribe. I want to see this number go up to 194,000 while we are live. It has to go up to 194,000. Come on, guys. You're not helping. Go. Good. All right, Joey.
David will keep dancing until
I'll keep dancing. Yeah.
you know, it's a great channel. I wouldn't just say that. I wouldn't just get you guys here. It really is the level of content. There is very little content that is of that good quality, which mixes tech and actual news, fundamentals, etc. So it's really a good place to be. Guys, on a serious note, go and subscribe, show them some love. They have been amazing with us. Joey, thank you so much. We'll see you guys all again soon. To the Banter fam, you guys, we got a couple of things to talk about. Guys, thank you so much. To the fam. All right, so how many likes have we got, Josh? Josh, how many likes are there? 1,400. Did you guys not enjoy the show? I don't understand. Did you not enjoy the show? I think it was amazing. I think it was a great show. It's full of alpha. Let's quickly look at the. I think we might actually even go live this weekend if the prices continue like this. I see that let's get the elephant out of the room. The blur trade. I was up 30 grand. I was up 30 grand on that trade. I think I might. Let me actually see how much I'm up here. I've got to see how much I'm up here. I really have to see it. So let me go there quickly. and log in. I should have listened to you guys. There were some of you here in the chat yesterday that told me to sell, and I didn't sell. So let me quickly just go to the derivatives protocol, and let me just see what my position is. I mean, you'll never believe it. You'll never believe it. I was up $30,000. I got $4,305. That's for ants. That is for ants. Oh man! All right. So listen, I had a great time with you guys here. I did want to give away a Rolex. We might still give away a Rolex. So this is how it works. Go to the comments of this YouTube, not the live chat. In the comments of the YouTube, put in your Bybit or your BitGet account number, user ID number. On Monday or Tuesday or Wednesday, whenever we get the 2,000 likes while we're live on a show, I'm going to go at random. I'm going to go select a winner. And when I do, that winner is going to get the Rolex. We have to give away both Rolexes by the end of Feb. Time is running out, my friends. Time is running out. Speaking of time is running out, I need to go. It's dinner time for me. I'll see you guys again soon. Maybe on the weekend. Until then, trade well, my friends.